Some really important things happened today. We got black candlesticks on the NASDAQ and S&P 500. This is the NASDAQ right here. NASDAQ went a little bit higher. NVIDIA still not moving to new highs. NVIDIA rallied up, and it got a topping tail today, filling the gap, but for the second time there. Again, you still have a bear flag if you change the boundaries to you. But look, we've got a black candlestick. Black candlesticks sometimes mark turning points or tops, just as hollow red candlesticks mark bottoms sometimes. Always work. Information is everything with candlesticks. Candlesticks are meaningless unless they are confirmed and you get a follow through. NASDAQ, we got a candle of indecision, and it was a black candlestick with the real body, and it was a top, possibly a peak here. Our divergence now completed on the 60-minute chart with the RSI there for NASDAQ and S&P 500. I'll be watching. Do we sell off with Powell's testimony tomorrow and confirm this candlestick? That's what I'll be watching. This is the NASDAQ daily chart, and if you begin to see that happen, again, this is the MACD. MACD starts to roll over, and you get your divergence completing here once the MACD rolls over. The stochastic did roll over today. This is a stochastic, and I've just blown this up real big so you can see it here up close and personal because I wanted you to see these candlesticks. We got a spinning top. We had the market rise on extremely light volume with the holiday. Now we're seeing smaller real bodies. Divergences are forming. Now we have it in the daily, the monthly, the weekly, on the 60-minute time frame. It's a NASDAQ daily chart. NASDAQ has an 8 of a 9 count. As long as we don't close below the bar from 4 bars ago, this bar right here, it will complete a 9 count sell signal tomorrow. The 8 bar may be the high of the count. NASDAQ Composite got the 9 count today. So did the S&P 500. S&P also got a spinning top candlestick, also a black candlestick. Now, we had the doji yesterday. I told you it was either a continuation or a reversal bar. It was a continuation. And upper boundary that I've been talking about, the rising wedge on the daily towards the channel on the 50-minute chart. I'm going to be watching. Is this a peak? We got a black candlestick and a 9 count on the very same day. S&P 500 daily chart. Rally with the retail investors, extremely light volume, candle of indecision, now another candle of indecision. You're getting these back-to-back candles of indecision right here, the doji and the spinning top, showing that, hey, maybe momentum is beginning to wane. If it does, guess what? Again, the MACD here on the S&P, just like on the NASDAQ, you get your divergence. And again, hitting the divergences on a lot of indicators. And again, the stochastics on the S&P 500 and NASDAQ rolled over today. We're probably going to see a red bar in the next day or two, maybe tomorrow. Awesome oscillator. I told you when those divergences complete that we'll begin to see the divergences in the weekly time frame begin to play out. This could be it as we're getting the black candlesticks, the 9 counts, and the negative divergences completing. Are you picking up what I'm throwing down? This black candlestick is forming at the trend line going back to July of 2023. I've been talking about this trend line having a rising wedge in the weekly time frame for a little while, but I've been showing it to you on the daily chart here as well. And again, if you connect the July peak, you connect it here to the March high, and then we got that April 1st high that went just a little bit higher. We're coming up, we're slamming right into this level right now, and it's forming this bearish rising wedge as I've been talking about. Another rising wedge with this move right here, if we exclude the shadows, which I've been showing you on the daily chart, we have a rising wedge right there, a smaller one in the daily time frame. This is the bigger one that I've been showing you on the weekly chart. If we start to reverse, which again, we have the black candlesticks, we have the 9 counts, we have this trend line, the negative divergences. Start to see that begin to produce a reversal, then I think we'll break the trend line. I think we'll come back down here towards the 200 that I think will be up at this level by the time we reach it. I think we'll sell off into the July meeting, towards the end of July on into early August somewhere, probably in all likelihood. And I think there'll be hopes of a rate cut. Again, I think we could go back up and form the right shoulder here and get this pattern, but I think we'll move back to the 200, bounce off of it. There'll be some interest at the 200. We'll follow Bitcoin. As I've said, Bitcoin has already dropped down to the 200, moved beyond it, back to this low. It's got a lower high, lower low. It'll probably get a rebound. I think the S&P will play catch up as they have a positive correlation. As we're coming up and slamming up into this trend line, you can see it right here. Again, we're hitting this resistance, and we're forming a 9-count sell signal and a black candlestick. I have the bars that are either red or green. I don't have black candlesticks on this chart. I saw it on the other chart. Now we're completing a 9-count. Now we got a 9-count previously over here, a 9-count right there, but it was not perfected right there until we got the close above it. But we corrected sideways. NASDAQ pulled back, S&P corrected sideways. I told you at that time, the 9-count will either give us a corrective move or a reversal. Got the headed formation here, the marking of it off to the side, so you could see this 9-count here. Again, the left shoulder, the head formation, and we got a smaller one on the intraday charts. I think we're headed back to 4,900. I think we're going to get a really ugly sell-off into the balance of July, probably on into August. We do have that late July meeting. We'll see if we can recover. If we get a big dramatic drop, maybe we do just sell off to August and get something like that. But I think you're going to get and then rally into September. And then the Fed, I think, will cut in September. And I think that that's going to be it. Careful what you wish for. Understand, the herd, the experts, they're all telling us, oh, no. A soft landing out of the Fed. It's going to be bullish, and we're going to have this bull market. We're not, what recession? What are you talking about? We're going to dodge it. They say that every time. Every time we get a recession, because the Fed's policies lead to negative outcomes, always. No exception. Now, I'm listening to the financial channels. I'm listening to people go, well, the Fed is waiting too long now. Lower rates. Now you have this camp starting to say, well, the Fed's waiting too long, a risk pushing, and when the recession happens, I say, well, it was the Fed that they waited too long, they kept rates too high. It's about inflation because they told us forever it was transitory. Now starting to have people come into that camp, and again, these are the people that have been saying, oh, no, we're going to have this bull market because we're not going to have a recession, we're going to have a soft land, yada, yada. I'm telling you, the inverted yield curve, the unemployment rate, other indicators are warning we're going to have a recession. The Fed actually needs a recession to fix the inflation problem. It is their policies that cause problems in the economy, and also meddling with the markets, extremes, both directions, created to add more stability, and they actually create instability, creating exaggerated moves up, exaggerated moves down from their policies that lead to negative outcomes. You've got a 9-count here on the S&P. You've got a possible head and shoulders, smaller one right here on the intraday charts, as I've talked about. Massive rising wedge here, and then a smaller one in the more recent price action, as I've been talking about, excluding the shadows. And again, from the May high, we're slamming up into that trend line right there. We're slamming up into the trend line going back to the the July 2023 high. So again, we're likely going to see a turn at these trend lines with our 9-count, our black candlestick. And again, candlesticks have to be confirmed, but I told you, again, you got a good shot at a reversal here. NASDAQ 100 got an 8 of a 9 today, but the NASDAQ composite, again, a candle of indecision, got a 9-count. You have a triple 9 here in play, perfected signals here on the NASDAQ composite. The NASDAQ 100 got an 8 of a 9 count. It very well could be that that is it. Even if the 9 count is not the high of the count, it will still be a perfected sell signal because 8 or 9 have to be the high of the count. The 200 is above this horizontal level for a neckline. NASDAQ may drop below the 200, like Bitcoin is currently dropping below the 200 with the sell-off. Keep talking about Bitcoin because they're going to follow Bitcoin's lead. Bitcoin now taking over the leadership. Sometimes Bitcoin follows the stock market. Sometimes the stock market follows Bitcoin. Diverged. Bitcoin was not able to make new highs. The stock market has. The stock market is about to follow Bitcoin. Getting the black candlesticks. Again, we saw that earlier. You're getting the 8 of a 9. Will likely complete the 9 count tomorrow, but the 8 bar could be the high of the count. Again, we're likely headed back down to this level down here. And again, you've got your head and shoulders pattern here on the NASDAQ 100. Here we had a 9 count, went sideways, got another 9 count. It wasn't perfected, but they still gave us a sell-off because this was perfected over here, but we went a little bit higher, but you had a 9-9 there. Went higher, resumed the advance. Now you're getting a 9 here, and you got a possible 9-9 here in this recent price action. And again, if we start selling off, you've got a possible miniature head and shoulders in a much larger one. NASDAQ daily chart 100. Black candlesticks, 9 counts forming, slamming into major trend lines of resistance. No, this time is different. No, it's not. We've been advancing on declining volume. We're now getting signals in the 60-minute time frame and the daily time frame that are suggesting that we're going to start seeing the extremes here in the divergences with extremes start playing out in the weekly time frame. Seeing it play out in the 60-minute time frame, the divergences, it spills over into the daily. The daily, it will spill over into the weekly. Start a reversal. Again, we'll be watching to see how we closed. You've got this rising wedge. I've talked about this trend line. We're slamming right into it. I've talked about it in the daily. You'll see that, and we're forming a 9 count sell signal. In the weekly last week and the daily today, divergences are going to play out. No, this time's different. No, it's not. People that are buying into the AI hype, it's going to go on forever. We're going to have a rude awakening. NVIDIA making new highs right now. It's forming a bear flag. Competition will eventually bring NVIDIA down. We saw other Wall Street darlings with the bursting of the tech bubble. But I've got it everywhere. It's all over the place. More weekly charts to show you amazing things happen today, daily time frame, and on the 60-minute charts. I'll show you that. Please support the channel with the link directly below. That allows me to be able to provide you this information. I get offers to sell you stuff all the time, and I turn the offers down because I don't want to make merchandise of you. I don't want to send you to a bunch of websites. People want to sell you a bunch of stuff or try to sell you their products myself, influence you to buy stuff. Smart enough to know what you want and don't want to buy. So I just ask that you partner with me directly and just support the channel, do what you can to help out. Put it all out there for free and just ask that you do that, but I do need your help in order to make it work. A lot of time and effort to do all this. Share with you the things that I look at every single day, but it's a big undertaking. Like my signals, you like my charts, let me know that. If you could take a moment to step up to the plate and help out, I would really, really appreciate that. Please let me know that you want this information supporting the channel today. Thank you. Your consideration on that. Look, we've got momentum forming the divergence. We've got the rising wedge slamming into major resistance. 9 count sell signals in the daily, the weekly, and the monthly time frame. We've got these divergences all over the place in the weekly time frame. It is everywhere. Warning, we are about to get a major turn in the market. Seeing Bitcoin make a lower high, the S&P make a higher high, diverging just like they did back over in 2021 and 2022. S&P diverged with Bitcoin, and it followed Bitcoin's collapse. Over about 6 or 7 weeks, it declined by 15%. Actually, 27.5% over the next year. This is likely not going to be a correction. This is likely going to be a major top. But again, Bitcoin is having huge warnings. I just want to continue to point that out. It's got a massive negative divergence on it. NASDAQ's making new highs. NVIDIA's not. Huge warning signs. NVIDIA got a topping tail. Possible bear flag in play right now. Rising wedge in play on the NASDAQ. A weekly chart. Now, I'm about to blow your mind. Are you ready for? Are you sitting down? Getting these 9 counts. NASDAQ's going to get it tomorrow. S&P's got it today. NASDAQ Composite got it today. This is the daily time frame, okay? By the way, S&P got that 9 count. It corrected sideways. NASDAQ had the pullback with the 9 count. I told you again, the 9 counts either give you the pullback and reversal. This one's likely going to give us reversal. Here you have a 9 count setting up for tomorrow on NASDAQ 100. Today, the 8 bar might be the high of the count. NASDAQ Composite got it today. NASDAQ weekly chart got it last week. We'll be watching to see what the bar looks like this week for the close. And again, I told you last week, again, we could narrow range body. A reversal for an evening star. We could get a red bar and get a dark cloud cover if we opened higher. A lot of different possibilities, but we'll see what happens. We'll see how we close. Get a green bar, big green bar on light volume followed by a red bar. We have a 13-9, a double sequence count sell signal in the weekly time frame. Now you're getting the 9 count in the daily time frame. S&P got it today. NASDAQ will get it tomorrow. That composite got it today. Now here's the mind-blowing part. You're getting the 9 count in the monthly time frame. Now again, bar 8 and 9, they're the high of the counts. So again, even if we sell off before the end of the month, again, you can have a reversal. Here we got a 9 count on NASDAQ. We went a little bit higher in the monthly time frame, and then we got a 37.5% sell-off. Sometimes you go a little higher. Here we got a 9 count, and it marked the very bottom. And we rebounded, and we covered back up. This 9 count is showing price exhaustion. You got a 9 count right here. It gave us a pullback, even though it was not a perfected signal. But now you have a 9-9 in the monthly, which is a reversal pattern at major resistance levels. A 9 count here in the monthly time frame. You're getting a 9 count. You may have a topping tail or reversal bar before the month ends. The month is still young. A 9 count on the monthly chart. You're getting a 9 count weekly chart last week, and you're getting a 9 in the daily time frame. All reversal patterns. NASDAQ 100. Composite all-inclusive is doing the same thing. All the people running around on social media saying, no, this time's different. I know there are negative divergences everywhere on the weekly charts and the monthly charts, but AI, that makes it all different. Absolutely nothing to worry about. These people are going to get a rude awakening very, very soon. Again, the S&P getting the 9 count in the daily time frame. By the way, the last two have given us corrections. Again, this 9 count in May gave us this correction. This 9 count right here gave us a sideways correction. NASDAQ got a pullback at that point. This one will likely trigger a reversal as we're at major resistance levels. Long-term resistance, as I've talked about in the monthly time frame, to the 2000 top, turned off a trend line with its double top, 125 years old. It's highly probable that the Dow, which that trend line is called other major downturns in the market for the Dow, to 1899, it's likely, oh, this time is different, is not going to happen. It's going to be the same as usual. Dow is not making new highs. S&P and NASDAQ are. Huge red flag. You got a divergence between NASDAQ and the Dow. You got a divergence between the S&P and the Russell. We just saw we completed that 9 count today. We'll probably complete it on NASDAQ tomorrow, NASDAQ 100. We got the 9 counts on the weekly charts last week. Here's the S&P 500. We'll see what kind of candlestick we close. We get at the close. If we get a candle of indecision, maybe the big move down starts after inflation data, or will it happen this week with Powell? And with the inflation data, we'll be watching to see how it unfolds. We had the 9 count last week, a double sequence count sell signal at 13, followed by a 9. That is a reversal pattern. You got the 9 count in the daily. You got the 9 count in the weekly. With these 9 counts, sometimes you go a little higher and then turn. Other times you turn immediately. We got a black candlestick with the 9 count today. So you got a shot at a reversal starting with the 9 count in the daily time frame that was associated with black candlesticks. And while the S&P or NASDAQ is getting a 9 count in the monthly time frame, the S&P has an 8 bar. The 8 or 9 could be the high of the count, so the 9 count does not have to be. But if you complete it, you'll have a double sequence count sell signal. No guarantee that it does complete. Sometimes they don't. Prices just get too tired to complete it, and they reverse. We already have a 13 countdown sell signal. A 9-9 signal was associated with the 2022 peak. 9 count was associated with the 2007 top. These counts just show price exhaustion. So again, I think that a shot at playing out here with the 9 count, it's just maybe we have the 13 and we overthrow it. Are getting the 13.9 on the monthly chart for NASDAQ, and you potentially could get it in the month of August. Start seeing if divergences in the weekly time frame begin to play out, then all bets are off for that. I told you I was looking for a divergence to form. I told you we may go down and come back up and form it, or we may get it immediately right here, right now. We got it here immediately, right here, right now on the S&P 60-minute chart. Here's a little miniature head and shoulders I was talking about. If we start to decline and head back towards this level, there's a 200 period here on the 60-minute chart. You've got a divergence now complete on the RSI and on the MACD. Price went higher. We gapped higher. The open rally with Powell there a little bit, and we fizzled out and kind of went sideways and turned down. S&P did not fill the gap. NASDAQ did. Watching this divergence. And if we start to sell off with it, do we see the RSI come down and then turn back up and establish a lower high if we set up a little miniature head and shoulders, move back to the cloud here or something and get a little head and shoulders. So we'll be watching that on these intraday charts. Divergence I told you I was looking for, we now have it. S&P starts losing the momentum cloud, the momentum line, the 20-period moving average. We start losing these levels, then again we can move back to the 50, back to the trending cloud, and if we continue to move below those levels, then horizontal support and towards the 20-period or 200-period moving average, which will likely be closer to this level by the time we reach it. Similar to what I've been talking about, the head and shoulders in the daily time frame. As the head and shoulders, by the time we reach it, we get a big sell-off back to 4,900. 200 might be up there on S&P 500. This is the smaller version of it on the intraday charts. Divergence done. Black candlestick. 9-count sell signals. Count sell signals last week on the weekly charts. Zoom out. Again, I've been talking about this channel. Again, if we exclude the lows in here, you've got a rising wedge in the daily time frame, but we're coming up and again slamming up into this area right here, and we have it parallel to the lower boundaries down over here. And again, have a divergence on momentum. It had turned back up. We turned higher with Powell there, and we've got a divergence here. We've got a divergence on the RSI. The divergences are now done in the 60-minute time frame, and we can go lower. And if we do, you've got the possible head and shoulders. Remember, we talked about this bounce off this area. I told you, again, we could still go up and hit this upper channel line. We've talked about that over and over again. Well, we did. Now we're probably going to start seeing momentum drop down. The RSI turn down, probably going to head back towards this area, and again, towards our 200-period moving average, and eventually towards the blue trend line. If we see the black candlesticks and the 9 counts begin to play out as a reversal, I think you got a good shot of it. If we look at the RSI, again, I told you I was watching for a divergence. I was looking back over here because, again, port held. Trend signals did not change, and so I told you we were likely going to try to get a rebound. Still have these levels in play up here. We are talking about these trend lines from the May high. We've been talking about the longer-term trend line from the July peak of 2023, which I'm showing you in this video. We're slamming into both of those trend lines right here and forming this negative divergence. Now, again, it could be we sell off and we come back and get that right shoulder and validate a lower high. Again, very good chance. Now start seeing the daily divergences play out now that we have one here in the 60-minute time frame, and down here again on the MACD, completing that divergence here today with Powell. I told you to be watching to see if Powell gives us a possible reversal. Now we could still, with the black candlesticks, still try to go up and slam up into the trend line and then turn a little tiny broadening formation on the 5-minute chart. S&P was up 4 points today, and if you look on the 5-minute chart, we gapped higher with Powell, and then we kind of drifted, we went higher, formed the divergence, and then we turned and we came down towards the gap fill here. And again, it could be we're forming a little head and shoulders if we try to pop a little higher and then turn and drop below the 200, or a little broadening formation if we go back up and hit that trend line or maybe overthrow it or whatever, and you get yourself a little tiny 3 drives to a high or a broadening formation. Just something to pay attention to. But if we start to just turn and that's it, then you start filling the gap and you start going lower, or maybe you gap down and fill this gap and then go lower and get a gap moving in the other direction down, then it will be that we have a gap and trap right here that we gapped higher and we start turning. We'll be watching today's gap, and we'll be also watching the high that was made today with Powell. We're getting negative divergence on the 60-minute chart, but you're getting it on the 15-minute chart here and so forth. A lot of divergence developing. So we'll be watching to see if we start giving back the rally that we had with the lighter trading volume during the holiday week. NASDAQ, it gapped higher, possible gap and trap. Negative divergence now complete here. Again, rallied higher, drifted lower. The NASDAQ did fill the gap. The S&P did not, today's gap. So again, we'll be watching to see what happens. But again, do we sell off with Powell or the inflation data, the balance of the week? We'll be watching to see how it unfolds. Divergence complete now on the RSI, down here on the MACD, here on the 60-minute charts for NASDAQ. Again, NASDAQ, same thing here. We hit the trend line connecting the peak here and the peak here, which included the shadow. If we exclude the shadow, we popped above that upper boundary. You still got a really nice looking channel here. We got the divergence going on now, completing that today. So we'll be watching. You got a divergence on the RSI and the MACD here now in the 60-minute time frame. Also seeing momentum turn down again, gapping higher. We completed the divergence. S&P did the same thing, and now turning down off of extreme. So again, we'll be watching. Do we start coming back down towards this area here, towards the 200 period moving average? And again, if you do, you've got a little miniature head and shoulders that could carve out. 9 count tomorrow. Play on the NASDAQ. 9 count does not have to be the high of the count. 8 bar today could be the high of the count. You got a black candlestick watching as these divergences are now in play. Warning sign on the daily chart, the Dow's not moving higher. It's got a double top at major resistance. It's forming a bear flag. Got a topping tail. We had a 300-point rally. We gave it all back. We sold off early on there today, but then recovered, went higher, but then gave that back as well, getting a candle of indecision. You have a bear flag, and again, a potential topping tail just above the 78.6 Fibonacci, not seen on this chart, but it is just above the 78.6 Fibonacci. Huge warning signs from the Dow. You got a topping tail yesterday, form of a shooting star. Not confirmed today, but another candle of indecision and another rally that ended up fizzling out. We've got the RSI at extremes, almost a Class B divergence with 2 equal peaks and the price going higher. You've got a black candlestick. You've got a 9 count. You're coming up and slamming up into the trend line here. Again, a rising wedge. If we exclude the shadows here, a channel in the 60-minute time frame that will likely produce a move back to 4,900. You have the negative divergence on the MACD. Stochastic rolled over today. We have the divergence on the money flow. We've got massive negative divergence from the May high on the parameter. Set on the 60-minute chart, if we exclude the shadow down here, you still have a nice looking channel on the NASDAQ, divergence on the RSI and the MACD. Again, we're likely headed back to 17,000. It got a smaller head and shoulders here if we start turning down and taking out the 10 and 20 period moving average. I told you when the negative divergences begin to complete here on the awesome oscillator and the MACD that we'll see them begin to play out in the weekly time frame. I'll be watching for a red bar before we end the week. I think that is highly probable. And again, we've drifted higher on lighter volume. You've got the negative divergences here. Now we got the stochastic rolling over here. This is NASDAQ, by the way, NASDAQ daily chart right here. And when we start seeing the divergences begin to play out, 9 counts begin to play out in the daily time frame, again, we could start seeing red bars here, and the divergences here in the weekly time frame begin to play out. This is NASDAQ weekly chart. Same is true for the S&P 500. There are divergences everywhere on the awesome oscillator, the MACD, RSI. It's everywhere. Another green bar today as we had Powell's first day of testimony. Again, the stochastics rolling over, the MACD, awesome oscillator are forming divergences. We'll see what happens with our black candlesticks today. We'll see if we have the 9 count play out immediately on the S&P that we got today. The divergences begin to play out on the 60-minute charts. Start to see them spill over here into the daily, and if the daily starts playing out, then it will spill over into the weekly charts, and they'll begin to play out, and you'll have a reversal underway. We had Fed Chair Powell begin 2 days worth of testimony on Capitol Hill. The market gapped higher, down off of those highs after gapping higher and going a little bit higher. Candles of indecision today. Important stuff. We got major signs today on the NASDAQ and the S&P 500. Watch the video all the way through. You'll see what I'm talking about. Market closing at new highs. Fed Chair Powell expressed concerns about holding rates too high for too long. I believe we're probably going to see a September rate cut in all likelihood. I think you'll get 2 cuts this year. I told you at the last FOMC meeting that we were going to have the Fed reduce the amount of cuts, either 1 or none, and they did that, and the market wasn't expecting that. I was talking about all this. We're going to get the inflation data. It comes in hotter than expected. The market is going to sink. Head and shoulder patterns that could set up. If we start sinking down, get more hopes of a rate cut next FOMC meeting in late July, give us a head and shoulders pattern that could again set up for a topping process in a head and shoulders pattern. I think it's very possible that that is what is setting up right now. Shoulders pattern that was at the 2022 top, inverse head and shoulders pattern at the 2022 bottom. Very common pattern. Now, the data, the CPI data on Thursday, it is supposed to be cooler. Watching to see what happens. Powell's talking about more good data, opening the door to rate cuts. You see inflation contained. You're now seeing the unemployment rate tick up. Historically, 3-month average move above that by 0.5%. 1 year ago, a recession follows shortly thereafter, and we're seeing that to set up. You see the unemployment rate tick a little bit higher, but it's predicted every single recession right before it's happened since 1970. The inverted yield curve, it's going sideways, starts to uninvert. The recession will be right around the corner. That's getting ready to happen. I think the Fed will end up, in all likelihood, cutting in September, probably one more cut either in November or December. Now, right now, the expectation is that we're going to get the cut in September. 70% chance that happens. 2 cuts are still on the table. Another cut in December, but September is expected. I think that will be correct. I think we'll sell off into summer here, try to rebound into the September meeting at some point. If you do, you've got a possible head and shoulders. Herd thinks that these cuts are going to be bullish, and again, they're going to create a market top, probably happening right now ahead of that, because I think that if we do get the cut in September, stock market likely peak beforehand, which very well could be the case right now, setting up a massive head and shoulders in the daily time frame. What this looks like by the second day, at the end of the second day with Powell's testimony, and then also the inflation data that we'll get later in the week. We'll get the CPI on Thursday and the PPI wholesale inflation on Friday. Boost cuts down to 1. This is probably going to end up being correct where we get to. That's what I think will happen, and I think the first cut is probably going to be in September. We already have the other central bankers already cutting around the world. The Fed is likely not far behind, so I do think it will probably see a September cut, and that will usher in the bear market, and the Fed will be doing that because recession is coming.